And welcome back to the Factor Uncensored. Now here's some good news for parents out there. In just 2 weeks, families will start to see the cash deposits of the advanced child tax credit. It's part of the COVID-19 relief package passed in spring. So who gets it, how much, and how does it work? Those answers right now on the Factor. And joining us from the University of Houston downtown is Dietrich von Bietenfeld, and he is here to talk about this extra money that some parents or most parents in this country will see in about 2 weeks. Tell us a little bit about this money, this windfall that parents will be getting.
Absolutely. Well, it's in theory an advance on your 2022 return filing for your 2021 taxes. So as usual, the government doesn't necessarily give you a gift. This is something that will be claimed on next year's tax returns. There's an advance to 50% of this enhanced child tax credit. So instead of the usual $2,000 for children under age 6, it's $3,600. For children between 6 and 17, it's $3,000. And for actually even 18-year-olds and for the first time 19 to 24-year-old full-time college students can claim an initial $500 payment to their parents, meeting certain eligibility criteria. As we're used to with the stimulus checks, there are income thresholds, so that adjusted gross income level is $75,000 cap for the maximum benefit for single filers, and of course $150,000 for couples filing jointly, $112,500 for the rare person who files as head of household, and then it decreases up to around $240,000, and it will phase out $50 per $1,000 after that. But you're only getting an advance on half of it, so these payments will only be $300 or $250 through December, and you'll be able to claim the remainder of that enhanced child tax credit on your 2022 tax returns. And these payments should roll out July 15th if you haven't unenrolled by June 28th for the July 15th first payment, or the 3 days before the first Thursday of each month. So 3 days before the first Thursday of each month where a payment will be delivered, you have the opportunity to unenroll for whatever reason.
You can opt out if you just don't want it right now.
Yes, sir. And there are a number of reasons people do that. One of the most common of the 36 million families expected to receive this, 92% of families with children. There are a number of divorced families. And so maybe one parent alternately claims the children as dependents each tax year for fairness. And so to ensure that each parent gets the maximum benefit of that split sort of tax provision or dependency sharing, they may choose to opt out and receive the full $3,600 or $3,000, depending on your child's age, next year.
Is it the first in line when you're talking about parents, if parents are separated or divorced? And what if both parents file? Will the IRS have the foresight to divide that payment up, or will both of them get two big payments and end up having to pay it back down the road?
The latter. So unfortunately, if both parents claim that the child, this enhanced child tax credit, the IRS will come back for half of it, and there will be questions of tax fraud. So you don't want to run afoul of the IRS, as Al Capone knows.
Exactly. Now, two things to note. This is an advanced tax credit and will not be considered taxable earned income. Also, as long as you file taxes this year, the IRS knows where to find you, and there's nothing you need to do to opt in.